Welcome to another video. If you're new to the channel, I'm a top author on the TradingView platform, as well as running an educational company and swing trading full-time with my students. Now, in this video, we'll be speaking about trend lines. Now, many people think that trend lines work. Other people think that trend lines don't work. The truth is in the middle. They work if you use them correctly, obviously. So today we'll be speaking about how to use trend lines correctly, avoiding the trap that market makers are bringing in the market every single day. So without further ado, I will invite you to go and check out this video and watch it until the end, because it's very key to understand this concept. Okay, so let's speak about trend lines. Now, trend lines are used a lot by market makers to basically manipulate the market when it comes to basically using your orders to actually fill in theirs, okay? So it's extremely important to understand this concept, basically. Trend lines are not supposed to be used to find the direction when it comes to lower time frames. And by lower time frames, I mean intraday time frames. There is a reason why also on TradingView, monthly, weekly, and daily are separated by this ray here, from the 4 hour, 3 hour, 2 hour, 1 hour, and anyway, all intraday timeframes, because the monthly, weekly, and daily are supposed to be used for the direction in the market. Then your entries can be taken on lower timeframes, and by doing this, you will be able to optimize your risk to reward. But it's extremely important that you take the direction from the monthly, weekly, and daily. So if you're using your trend lines on the 4 hour time frame to find the direction, it's big mistake, okay? Do not do it, because you will start drawing trend lines, okay? You see that you have basically the possibility to draw a trend line here. You take the trend like this and you see, look, this looks quite solid trend line, okay? 1, 2, 3, 4 touches the market here, completely ignored, fake breakout to the upside, fake breakout to the downside. Everybody sees the break, they start to long. Then the market breaks back below, okay, it was a fake breakout, let's short. And then the market goes back above. So loss after loss after loss. So what are you supposed to be doing? You're not supposed to use trend lines on lower time frames. I will show you now probably one of my first big winners, okay? The first big trade in which I made massive risk to reward. And it was when basically I was starting to trade higher time frames, okay? I was, okay, lower time frames are just for entry. The higher time frames, that is where everything is going on. So at that time, I was already a couple of years that I was basically following higher time frames and taking my trades on lower time frames. And I was able to make some serious risk to reward. And that is where basically in those years, my brain basically lightened up to the fact that having a solid strategy that is based on taking the direction from higher time frame and then using lower time frames to actually time my entries was extremely important, because I was able to take my targets from the higher time frames, but my stop loss based it on lower time frames. So I had massive risk to reward ratios. So what we had here, as you can see, you have a trend line here, very similar to the trend line that we had on the 4 hour time frame. That is why I wanted to show you this example on the 4 hours. Because it's a very similar trend line, right? One touch here, multiple touches here, and then we are at this level, right? So when I was looking for the trade, I was at this area, okay? I was looking at the market and I say, okay, the market is at this very strong area, both from a trend line perspective, but obviously trading is all about basically using confluence, right? So you have a trend line like this. Now, the first thing that I want to speak about this trend line is that when you're taking a trend line, you don't want to take the trend line on the highest level of the second touch. You want to touch as many candles as possible. Let me show you basically what I mean by this. Look, if I adjust my trend line in this way, so basically putting it on this higher, on the wick, the highest level of this high, this wick here, what happens? I'm not finding anything here. But if I adjust, okay, and I touch as many candles as possible, so this one, this one, this one, this one, possibly also the other one, I'm basically now touching all the candles and I have a much more accurate trend line. That is 1, free tip that I'm giving to all of you. So that was the first thing. Then what I also realized, look, the market is at an extremely strong level because what we have here, support, 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 support. Now all that support, since the market broke it below, is turned resistance at this level. And as you know, if you have an area of support and the market breaks it to the downside, that support will be turned resistance. And this is a key concept, right? Key concept in the market. So what you actually have here is a very strong confluence area given by this weekly trend line and this confluence area of previous support now turned very strong resistance. So from here, what you want to see, you want to see a push to the downside, a big push to the downside, possibly to where? To the previous low, right? You want to see the market make all this push to the downside. But if you were looking at only 4-hour time frame, I promise you that you would never be targeting this huge push to the downside. You would never be targeting 820 pips, okay? It's simply not as it works because you would never trust that the market actually made this push. But by looking at the bigger picture, you know it because you have this major trend line and you know that the market is supposed to shift away from major trend lines like this. Just a quick reminder, make sure you comment below and you let me know which topics you would like me to cover in the next videos. So how did it play out on lower time frames? When did I take the entry? Well, I didn't take the entry until the market actually made a lot of moves because I was waiting for a lot of confirmations. So this is exactly the moment in which I actually took the trade, okay? After this huge push to the upside. This was a nice manipulation to the upside, okay? And I knew that we had some extra structure here. Plus, I was already using some, not all, but like 60-70% of the advanced rules that we have for entry. So I can't obviously put them on chart, but I can just tell you this is previous support and resistance also in the 4 hours. But there are many other rules that were satisfied. Plus, we knew that banks were selling because basically I had the CO2 reports on it. So banks were selling AUD and they were buying JPY aggressively. So if banks are selling, and if you never saw the tables, basically when it comes to COT, you basically have the possibility to see what hedge funds are actually doing. And this is what you have it basically also you will have it on your student dashboard, but in general, you can also create these tables on your own. So basically you see the positioning of hedge funds in the market. And at this time, they were selling AUD and buying JPY aggressively. So what do we know? We know that the market wanted to make a push to the downside. All our rules were satisfied. Plus we obviously had this previous support and resistance or supply zone here. So this was perfect for a nice short. And this stop was very tight, right? Because we don't need to place higher stop because if the market makes it higher than this, then it's already fine, okay? We already know that if the market will go higher than this, then we will be stopped out of this trade, but we will have the possibility to take another trade later on. But we want to be out of the trade because we want to have big risk to rewards. So what happened next? This was just phenomenal trade. The market made a big push to the downside, then went almost to stop me out break even, but the market just kept melting. This was probably one of my first, actually was my first big winner. Okay, this was a massive trade. It was 1-11 risk to reward. It was the first time that I actually made 1-11. So 1-11 risk to reward by knowing that the market is supposed to melt, okay? By knowing from higher time frames that the market is supposed to make a push to the downside. And why did I know it in the first place? Because I knew that on the weekly, that is where I had to look for trend lines, not on the 4 hours, okay? Because the direction is from the monthly, weekly, and daily. And on the lower time frames, it's just for entry. You can use trend lines on the 4 hours, but it's only for entry by already knowing the direction on higher time frames. And the free tip that I gave you, make sure to use it, okay? Put trend lines by touching as many candles as possible because you will get more confluence. But remember, do not cut the bodies, okay? Touch as many candles as possible without cutting the bodies. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education for all of you, as well as going and checking out the mentorship program. It's a very complete program. You first get all the rules on my strategies and then you trade them live with me. Each and every day I give you a new daily market breakdown showing you how you're supposed to be applying the strategies in live market situations, as well as answering every question that you have each and every day. So without further ado, I will invite you to go and check it out or go and check out the next video.